Hey, ladies and gentlemen. Hello, Shane. I see you've had your ads already. That's brilliant. Got a lot to go today, so let's get started. Let's get on with it. Lots of things I want to show you guys today. We're going to talk a little bit about news today and how the news affects the markets and what it does. I'm also going to talk a little bit about the VIX, and I'm going to talk a little bit about the Dixie, the US dollar. That's quite interesting, and I want to chat a little bit about that today. And mainly, though, I do actually want to chat a little bit about how you trade the fundamentals, because I had a question on that. I had a question on that recently. Guys, don't forget, trading is risky. If you don't like risk, you know you shouldn't be trading. You should be doing something nice, like being a doctor, mechanic, or something equally cool. Something great. Brent crude oil. What's happening with Brent crude oil? Brent crude oil is giving me a pain. It's come all the way back, but it has hit that trend support now, and there is a bit of a green candle developing back up again. So it might actually be okay. The United States dollar, South African rand is worrying me a little bit. At the moment, it's okay because it's broken structure. It's going back to the upside, and it has gone past the prior high, and it is looking rather positive for us. The United States dollar, South African rand is going in the right direction, because my belief has always been that the South African rand should be weaker. In fact, there's a good possibility that the USA might sanction South Africa because of the economic empowerment rules that they're putting in place, which are very racist. So what's actually happening at the moment is the South African rand is now starting to weaken slightly, although the US dollar is also starting to weaken down a bit as well. So there is a problem here, and I'm going to show you this on the Dixie, and that is, if the Dixie actually breaks down on its structure and weakens insanely, there's a good chance of a commodity super cycle, but there's also a good chance that the South African rand will look a lot stronger based on the fact that that's happening. So I'm going to have a look at that, and I'm going to show you that in a short while as well, because that's actually quite important. Today we did call the Nikkei, we called the Nikkei long, and that's because it did break structure here. It did start to break to the upside. But now we've got a bit of a red candle coming back, so it could also just be a retest. And for those of you who have gone long, hopefully it is just a retest, or it could just have decided that it wants to go down to the downside and create a new level. But as it stands at the moment, it's broken structure, it's on the upside. The odds on are that it will go up. And as long as you have your stop loss in place, and if it breaks below this line, I would kind of say let's get out of that and let's leave it behind, because it's kind of invalid if it drops below that line again and starts going down. But if it goes back up, that's looking great. So that one I was quite interested in. The S&P 500 has gone back up to retest. Now, sort of similar scenario. Is it going to hold here? Is it going to break to the downside? It's kind of undecided there on the candle before. Now we've got a tiny little green candle here. Everyone's waiting for something to happen. So there's a question mark here as to whether it's just a retest and it's coming down, or whether it's going to break to the upside and continue on up. But even if it does go up, you're sitting with a major resistance across the top here that it might hit and come down on. So it's not looking very positive for it at the moment. And if you go here to the DAX, the Germany 40, I mean, this is not looking much better. But what you have got here is a scenario where you've got a resistance at the top here, got the support at the bottom, but you've also got this supply of money here across the resistance. So there's a good chance that this could go up to take that money and then come down, which means very similar to the S&P, it's going to hit a resistance and then start coming down by the looks of things. So it looks like it wants to come down on that. If I look at that, that's kind of where I'm seeing it at the moment. United States Canadian dollar, that has bounced nicely, and as we said yesterday, long trade out of the counter trade. It broke through the trend resistance, it's broken to the upside, and it is now going up. So long trade on that is working out. That's going okay. So that one is fine. Oh, by the way, it's not on this particular account, but it is on other accounts. It's fine. But as long as you guys know that it's a trade. So that's a trade that a lot of you might have wanted to take or taken, and it is working out in your favor. Now, yesterday I did get the question on this, as there were some fundamentals coming out later in the day with regards to the news on jobs figures and things like that. And that's what I want to talk a little bit about today, before we go on to a few other things. And that is, when do you trade the fundamentals? How should you trade the fundamentals? And is it worth trading with fundamentals? And how does it work? I think I've told you guys on many occasions, I used to hang my hat on the news, and then I changed my whole policy when I started to realize what was happening. Now, Bitcoin has been in a bearish trend, and it broke that trend. It broke through that trend, it counter-traded, and it went to the upside. And it actually, after even breaking through that support, it started to break back through it again on the retest and just sort of broke through it. So with the green candle above that, I kind of expected the next candle to maybe be green as well and for this to start to recover. But obviously with the fundamentals in the background and the hoo-haws and whatnot, I was a bit concerned, so I didn't take that trade and waited. And luckily I did, because there's an undecided candle next to it. And then next to that comes the red candles, and it's breaking back to the downside. Now, this could also just be retesting this trend, but it just looks to me like it wants to break to the downside. Now, what I'm seeing here that maybe nobody else has seen, maybe I'm the only one who's seen it, but I'm pretty sure you've all seen it, and that is this head and shoulders. Can anybody see the size of this head and shoulders here? There's a shoulder, there's a huge head, and there's a shoulder. Now, what does that tell you? What that tells you is the length of that head is projecting the length of the drop, and the drop for me is down to this 100,000 or 98,000, which means if that breaks through that level, you've probably got a short all the way back down to 98,000. Bitcoin is going short, guys. So if you're looking at crypto, crypto is in all likelihood going to go down. That's the way I'm seeing it at the moment, and that's the way it's looking for me. How's it, FX Trader? Good to see you again. Absolutely brilliant. Don't worry about ads, guys. Shane will get all the ads today. How do you determine which trade is the strongest to take? I don't determine which one is the strongest to take. What I actually determine is which one is, if there's a trade to take. So I trade what I see. If there's a trade that I want to take, I take it. And I don't compare one to the other. If there's 10 trades to take, I'll take all 10 if I want to. Which one's the strongest to take? I mean, if you've got more confluence with all the information that you're getting, then yeah, you know, the more confluence you got, the more information that you've got surrounding that trade, obviously that's the strongest trade to take. But it's really dependent on what information is in front of you. Some trades are really sort of 50-50 in the sense that they're weak. You know, you look at it and you think, well, you know, I really don't know if I should take this trade. And then that sort of scenario puts you in a different picture. For example, a trade like this doesn't tell you everything. It just tells you it's broken structure and there could be a good trade here, but now you've got a red candle. It's kind of iffy. It's not really strong. It's not giving you that, this is definite, you know, sort of trade. But then again, those ones that are so definite are not always so definite either. So does that really matter at the end of the day? Also here, Australian dollar, I said this morning, is going back down again. It's gone back up, retested, and is starting to head down. The Australian dollar is also on its way back down again. How's it, Henny? Good to see you as well. And glad you're back on board. You see, the thing is with fundamental news, one of the big things that I was actually thinking of telling you guys about with the fundamental, this is the NASDAQ, guys, just by the way. I'm just quickly checking it out, because the NASDAQ is kind of important because, you know, those tech stocks, especially the NVIDIAs and that, and there's a bit of good news surrounding NVIDIA as well, I believe. So this might actually go up as well. So I think what we might get, if the NASDAQ goes up and tries to take some money here, then the S&P will probably try, and the DAX will probably try, and they'll probably all give it a go. This is the US dollar, Japanese yen. Now, this is also going to play into the whole Dixie scenario. Now, I'm going to go to the Dixie, and I'm going to show you guys that in a moment. After we've had a wee chat about trading the news, let's just quickly have a look here. This is the Euro US dollar, and it's kind of sitting in the middle of nowhere. Don't trade in the middle, wasting your time. One of the big things guys are doing these days is trading the opening range breakout strategy. That so doesn't work, guys. Although there are, okay, so the open range breakout depicts that the first candle, the first 15-minute candle, if it breaks below that, you go short. It breaks above that, you go long. It's kind of simple. I think Tom does a 30-minute or something like that. So you can trade that way. I mean, but it's the same as me drawing a line in the sand here and saying, well, if it breaks above that, I'm going to go long. It's very 50-50. There's not much to it. Okay. So when I talk about news and when I talk about news in general, I've got to say to you guys that what you've got to be careful of when you're talking about news is what type of news are you trading on? What type of news are you getting excited about? So if we go to the news, just out of interest, here's the news. If you go to the news and you read these headlines, this is the type of news that you might want to be trading on. But what you don't want to be trading on is US stock futures muted before payrolls report. So what you're going to do with the payrolls report is you're going to go, oh, I think it's going to be good, so I'm going to go long, or I think it's going to be bad, so I'm going to go short. And what always happens with these interim news things that happen every Wednesday, Thursday, and Friday, so every week you're waiting for this information, what normally happens with this kind of information is you get all excited about it and you try and sort of second guess it and understand which way the markets are going to go, understand the fundamentals and think, well, if it does that, then I should be going long. So what you do is you go in long and you get the right result. You get the right result. They come out and they say, this is what happened. And it starts to move in your favor. And you think, well, there you go. There you go. I got it right. And then 2 seconds later, it goes crashing down. And you think, but I had that news right. I knew what I was, and it's gone the other way. Why did it go the other way? And then you start fumbling, and maybe you get out of the trade, and then you get back into the trade, and then it goes the other way again, and then it goes down, and it goes the other way again. Because what's happening in the background is the guys are turning around and saying, yeah, that was the news, but if you look at the moon shifted slightly to the left and it turned a little bit pale, then that's the reason that this is actually going to go actually this way. And then all the big money moves it that way. And you sitting there as a retail trader not knowing what on earth is going on. Every time there's a news event like that, they always pick it to pieces and they always try and make a case for it to go the other way. So you've got to be very, very careful of these small news events. So what I tend to do with the small news events, what I learned to do over the years was get out of the small news events. Walk away from the small news events. Don't try and play into the small news events. You're wasting your time. The only thing you can do trading during the week is look at the markets and trade what you see. Trade the chart, trade what you see on the chart, and just play it up or play it down and manage your risk and follow the strategy. That's the only way you can trade these small news events. And then when there's a small news event like this around, or the Fed is talking, or they're changing interest rates, or doing something equally ridiculous, then the best thing you can do is maybe move your stop loss away so that you don't get spiked out of the trade for absolutely no reason whatsoever, and keep an eye on it at that time if you can, if you have the ability to do so. Otherwise, just come back and put the stop loss back in at a later time. But if it keeps on going down, you have to be very careful, because sometimes the news is really bad and it just sweeps everything out. But normally it'll sweep everything out, pick up the orders, and come back to where it was. What you're looking for with fundamentals and what you're looking for with news is big events. Big events like tariffs. Trump asked the US government court to uphold these global tariffs. Those are going to affect the markets long term, somewhere down the line. A company result, Google can thank OpenAI for its big win in court. A big win in court for Google is important to Google. You're looking at bigger news events, much bigger things that are going on in the background that will affect the markets. Geopolitics will affect the markets. A big bank doing well or going bankrupt will affect the markets. A big bank taking on crypto or Bitcoin in its exchange traded fund system or something like that might affect crypto. So there's a whole bigger picture that you need to look at when you're trading fundamentals. So if you're trading fundamentals, don't trade the small stuff. Trade the big stuff. The small stuff is the stuff you see every Wednesday, every Thursday, every Friday. Non-farm payrolls, jobs figures, all these little things. The Fed is in focus, the interest rates. What's the Fed going to do? That type of stuff is not going to move the markets long term. It's going to move it short term. It's going to give a short term knee-jerk reaction, because all of that stuff is normally baked in before you get there. these guys know what's coming next. They know what's happening. So all that kind of news that you're going to see in a few seconds is baked into the markets long before that you are going to get to the market. So what you're looking for is what's happening in the bigger picture. How will oil be affected? How will gold be affected? And that brings me to, for example, the volatility index that I always tell you guys, if you have access to this, trade it. This is the S&P volatility index, the VIX. Fantastic little thing. I normally like to buy it when it's around the 14, 15, the 15 area is fine. And it hasn't really been back to there for a while. So I'm not in it at the moment. I've been waiting for it to come back. But every so often, you get that big spike. Every so often, you get that big spike. What this is telling me at the moment is there's a little bit of volatility in the markets, but not a lot. I am getting a bit of FOMO because I've got a feeling that there's going to be a bit of volatility soon and I might miss out. But if I look at the gap there, the amount of time it's taken to get from there to there, this is a one-day chart. I mean, there is a bit of space to go, and I'm hoping that it'll get down to maybe the 15. You can buy again. These spikes, if you're trading decently, can make you quite a lot of money. But what I'm looking at with the volatility index for real is how much volatility is there really? I mean, is it really that volatile? Not really. It's kind of calm at the moment. But one of the big things I'm looking at is this. This is the Dixie known as the US dollar. Now, the US dollar is actually starting to fall down here. And there's a level here that is concerning me, because if it breaks through this level, there's a good chance, because the last time this happened, there was very much a commodity super cycle, which would mean that gold will go to the moon, silver will go to the moon, copper will go to the moon. All of these things will be in a super cycle. Will it happen? I don't know. But what I am concerned about with the Dixie is this. This is the 50-day moving average, the red one, and the yellow one is a 200-day moving average, and they've crossed. That's a death cross, which is telling me this is going down. How long will it last? Well, the last time it wasn't that bad. There's a bit of a swing here, so it did kind of hold on. It does worry me for the US dollar South African Rand trade, but it worries me for the commodity super cycle. So what I've been seeing this week, is this. And you might find this interesting, you might not. But look at gold. Gold and silver has been doing this, which means somebody on the inside has been watching that and thinking, if there's a commodity super cycle coming, I want to be in it. And this is moving up at quite a rate. So gold is actually going up at quite a fast rate, which is telling me something. It's telling me that with that being bullish, everybody's thinking with the dollar falling and collapsing, there's a good chance you're going to do well in gold, you're going to do well in copper, you're probably going to do well in silver and a whole bunch of the others. Here's silver. Silver's probably going to look pretty good as well, and there you go. It's looking pretty good as well. So keep that in mind. Keep that in mind. If the Dixie should collapse, there's a good chance that commodities are going to do incredibly well. So I've just been talking a lot. Shane, I do still have the Discord. I do still have it. I've got it on board, but I'm not using it. I'm not using it at all because there was too many people trying to imitate me or act like they're me and then trying to sell people stuff. And I just don't have the energy to fight them off, so I've just left it. I'm hoping that the YouTube posting system will become more interactive. The other way I'm thinking that maybe we should interact on a bit of a better note is with Facebook. I do have a Facebook page, trading, a trading page, which is, there's a link in the description below. There's a logical trading page, and there's also a group. So, and I've left links in the description below. Maybe we should, you can message on that as well. I think maybe that will be a better area to work with. I don't know, but because the Discord has just been horrific, and I do put posts there, so that might actually be a thing. So if everyone joins the group, Learn to Trade the Stock Market, it's called. If everybody trades that group, but you can get to it from the logical trading page as well. Then we can work with that as well, and that will be a help. I'll start pushing more over there. I don't manage it well at the moment, but I can start managing it a bit better. That might be an idea. That might be a really good one. So let's see. Tom's on a break. Okay. 10-15 US dollar ADP non-farm payrolls. You see, once again, everybody's waiting for those non-farm payrolls, the non-farm payrolls, the payrolls data, and everyone is going to try and preempt it or second guess it. And like I said to you now, it's not gonna do anything. So Lunch a lot, how's it? Good to see you, Lunch. The DAX long today turns out well. Hi, Shane. So you got the DAX. So the DAX is here. So the DAX long, the DAX is going to go long up until that supply, maybe, if it reaches that, and then probably come down. So I'm looking at the DAX, which has turned around and going back up towards to take that supply, which is also a resistance just above it. You see the big green line above it? There's a resistance there, which is going to hold it up and stop it from coming down and coming down to the support. And that kind of should go up and come down. We'll see. We'll see what it does. See how it plays out at the end of the day. So yeah, that was just my little rant on news, and I gave and as I said, yeah, I'm just looking at the US dollar and wondering what's going to happen with it. You see, that US dollar, if it breaks to the downside, is going to affect this trade immensely. It's going to hurt this trade in a big way. And yeah, there's the red candle starting already, and I'm a little bit concerned about that US dollar. But we'll see. I'll see what it does and how it goes. But one thing's for sure, if it does break to the downside, if it does decide to collapse, we're heading for a commodity super cycle. You see, the thing that's holding me up with getting out of this United States dollar South African rand trade is fundamentally, and these are the big fundamentals that you should look at. That's what I was talking about earlier. Looking at the small fundamentals, the things that happen every Wednesday, Thursday, and Friday, waste of time. But when you're looking at the bigger picture, like the USA is considering sanctioning South Africa because of their racist behavior towards certain groups in the country with regards to not allowing them to get jobs and things like that, then that kind of scenario is going to affect the bigger picture. And it's going to affect the South African rand. It's going to affect South African stocks. That said, the Aussie has done extremely well. The South African All Share has done extremely well. It's running like the S&P. It's going straight up. You've got to ask the question, you know, why is it so strong at the moment? Do they know something that we don't? And this is usually the case with fundamentals. They know something that we don't. They know that something's been resolved or something's happening on their particular side that is positive to what we don't know. We don't know the answer to that, and it's always difficult. Trading the news, lol. Yeah, that's my trade. Short on the DAX, also short on gold. Do the opposite to Shane. Shane, do be careful of the gold, though. As I said, if that Dixie does decide to fall, there is a very good chance that gold is going to go to the moon. I was hoping that gold would come down and do a retest so we could do a buy lower down. But it is bullish, it isn't bearish, it hasn't broken structure, and it is still going to the upside. But there is a big sort of candle up there that's telling you it should go short, but it did go short. And one candle, just remember this about candles. You know, we tend to trade on candles and say, oh, look at that signal that's going down. But each candle is only valid for the time period of the next candle. So if this is a 4-hour chart, if that's a 4-hour candle, it's only valid for the next 4-hour candle. It's not valid for the next 10 candles. It's only valid for one candle. So when you're trading with candles, just remember that. So what you're doing is you're looking for levels in the market. You're looking for money and liquidity in the market. But that candle can tell you what might happen next. That's what it's about. But do be careful on gold for that. And also on the DAX, do be careful of, let me see if I can get the DAX open here. This does look rather bearish all the way down. Does look short, but it does look like it wants to go up. Take that money there and then come down. It does look like it wants to grab some money before it drops down. Interesting stuff. I don't know. We'll have to see how that goes. I think I can actually draw a line with this thing if I want to. I'm not gonna bother. It's quite a lot of hassle. Okay. Bought some platinum recently. You know, Nick, it might be good. The platinum buy might be good based on what I've said now. If there is a commodity super cycle, but what you do have to look out for though, it's really, really important to keep this in mind. And that is, if we go back to this window here, and we look at this, this has to break through here. This has to break down for the super cycle to happen. This has to break down for everything, for the Dixie to go pear-shaped. It doesn't necessarily look like it is going to break down. It looks like it might bounce up. It tends to bounce up if you look at it in the past. This is a weekly chart, by the way, so I'm looking at this on the weekly. The thing that concerned me is this death cross here. That is a big concern. It is a big worry, but on the weekly chart, if you look at the candles, you know, they're not bearish. They're not that was bearish, but that's not really bearish. It looks like it's trying to recover. A couple of green candles. I'm just wondering how, if this starts to swing around and go back up, everything could go the other way, which means what we would have then is a different scenario altogether. Then we would get the gold scenario, which is not what everybody wants to see. That's long, which would take us short, probably all the way back down to this 32 level. So I would watch out for that. I'd watch out for that little swing. It's a bit like Bitcoin. You know, Bitcoin looked good. It looked like it was breaking to the upside, broke through the structure, broke through that area. Green candle looks good, and then it goes red. It starts coming down again. That green is trying to go up, but it looks to me like it wants to fall. And what I did see on the Bitcoin was this big head and shoulders, shoulder, head, shoulder. If that breaks to the downside, you're going to take out this whole area down the bottom here and probably fill it up. Crypto might be heading down. It might be a bit tricky. Also short. Okay, so the weekend trade. So Lunch and Lot's asking if I close my trades over the weekend, and very often I will, but not all. And I'm very I've got a funny way of doing this, and I take risks. I know I do take risks. I tell people you should close your trades over the weekend because if you wake up on Monday morning, there might be trouble. But then I keep Brent crude oil open forever, and I keep the United States dollar South African rand open forever. And there's a couple of other trades that I keep open forever. But here's the thing. One of my policies is this. If you own an index on leverage trading and you long, be cautious of keeping that over a weekend. If you short, take the gamble, because at the end of the day, what can go so well over the weekend that you're going to wake up when it's gone extremely long, okay? Normally it would be the other way around. It will go extremely short. So I am cautious on long trades on indexes. But I look at what's happening on the Friday before I make those decisions, like what's happening in the world. Because generally things don't happen suddenly. They happen slowly, they build up. What you got to do is keep one ear to the ground on what's building up, what's happening in the background. Is there a possibility that something could go incredibly pear-shaped at any second over the weekend? And that can help you to make a decision. If all is quiet and all is peaceful on the Western front, Eastern front, on any front, then you can normally sort of look at it and take the chance if you need to. Look, I'll take that chance. Everything's quiet. And most weekends it is. Normally what I've found with the crashes in the past, with the disasters of the past, was on Friday afternoon you normally get fair warning that something's going down. It starts to look very iffy. The problem with people staying in those situations is normally the psychology of, nah, it'll be all right on Monday, it'll all come back. The psychology of, this is just a correction. Everything will be fine on Monday morning. If you start to see some serious correction on a Friday, things are starting to look a bit iffy, and there might be some kind of like stories in the background, just get out, and come back on Monday morning and start again, because that's where it all starts. And then on the Forex trades, there I'm a little bit more careful generally, based on normally, especially with the US dollar, because if things go pear-shaped in the world, the one thing that is going to be affected is the US dollar. And then commodities are neither here nor there. Same sort of thing as the indexes, but it's both ways. With the commodities, just keep one eye on it. Crypto, on the other hand, no problem. It's open all weekend, so you can take that chance. You just have to be aware of what's going on in the world at any one time. Is there a possibility that things could go completely pear-shaped over the weekend? And that you have to keep your eyes on. But where I can and where I see the necessity, I will trade out for a weekend. Yeah. It just depends. It really does depend. You have to have a feeling for it. Okay, nice advice there. I close my DAX long maybe over the weekend. Yeah, like I say, Sir Lancelot, if everything looks peaceful on the front, then you can take that chance. But if it's not looking peaceful, if there's any chance that anything can go wrong, then rather let the trade go and come back on Monday morning. Hi Coral, good to see you. Good to see you again. Always good. All right, so, but yeah, one of the big things that is, like, if I was short on gold, I wouldn't leave it on the weekend with a view to the possibility of this playing out. This is the dollar. If this plays out, then I'd be kind of concerned. If this suddenly falls and drops and goes, then I would be concerned and holding that. And now I'm already starting to become concerned about the US dollar South African Rand trades, because this US dollar South African Rand trade could go pear-shaped based on that as well. So while South Africa as such, the South African Rand is under pressure because of the possibility of sanctions and that sort of thing, there's still the situation of the US dollar weakening, which would strengthen the Rand, and for no particular reason other than the dollar's weakening, and that would cause a different move here. So that leaves me in a bit of a quandary over this particular trade. But that said, I'm trading what I see now, because now it's broken structure. It's going to the upside. It's gone past that prior high. It's come back to retest it. Let's leave it and see what happens. Let's see if it actually works out. Let's see if it actually goes in our favor. See if it actually works out for us. Okay. Somebody was talking about the US dollar CAD long last stream. I took the same trade. Turns out, well, by the way, yes, United States Canadian dollar. That was what we were talking about. United States Canadian dollar long trade. And there you go. Right? There's the long trade. I don't have it on here, but I do have it elsewhere. And it's a good trade. I have it long, but somebody was actually mentioning to me about the fundamentals of this trade yesterday, saying, "Oh, should I stay in this trade, because these fundamentals are out there." And this is why I talked about the fundamentals at the start of the video, saying, you don't trade into the small fundamentals, the Wednesday, Thursday, Friday job, non-farm payroll stuff. That it's not going to affect your trading too much. Rather look at the bigger picture, rather look at what's happening around the world. And what would affect the United States dollar Canadian trade? United States dollar weakening, the Canadian dollar, if something happens in Canada, things like a change of presidency, elections, things like that, that can affect markets, that can affect currencies as well. So keep your eyes on the bigger picture, not the smaller picture. The smaller picture is kind of irrelevant. Hi, Coral. Yeah, I did see you. Yeah, that's still in it. Okay. So it's a good trade. It's a fantastic trade. I would say the target is up here, actually higher than that green line, somewhere up at the 139.2. Good trade. Just be careful, it could turn. But what I'm looking at now is that structure is holding, it's doing well, and it's moving in the right direction. So United States dollar, Canadian dollar is a fine trade. And the Australian dollar, United States dollar, has turned the other way, so that's also a pretty decent trade. It broke, went up, went the other way. Were we long? Yeah, we were long. We took that. Now it's going short again. Should I wait for another long trade or should I take the short trade? I'll wait for another long trade because there's a level here. And that'll be fine. Boom, 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 boom. I'm trading both position trading and day trading. Most people get into day trading because they get bored and it gives you some charts to watch. It gives you something to do. I was going to play around a little bit with you guys with day trading. I think Shane asked us to do it the other day, but I want to try and keep it as much as possible on the swing trading and position trading. Maybe we'll have a little game one day and do a little bit of day trading. It works the same way. There's nothing wrong with it. I mean, you basically take a trade either way. A 5-minute trades gives you more shiny stuff. There's more things happening. There's more things to do. The markets are moving more frequently. There's more going on, to name but a few things. It's interesting, but just remember, day trading is a different psychology. So don't confuse yourself with swing trading, position trading, and day trading, because day trading can affect you psychologically. It can be soul destroying, because you'll make win after win after win after win after win, and you'll hit that one big loss, and it'll be, oh man, what happened? And there's a whole bunch of things that will go on with day trading that's going to affect you. So just get used to it. Yeah. Look, if you're in a hurry to pass a funded and you're gambling on it, then yeah, why not? Go for it. The 5-minute charts can make you money quickly. It's high stakes trading. It's basically high stakes trading. You're trading with the same stop loss. You're trading with the same risk, but you're trading on a much lesser movement, and it happens quicker. That's fine, but you can also lose quicker as well. So just keep that in mind. It's not all roses. It's not all roses at the end of the day. So here we have the euro US dollar, and of course this is going down. It's starting to come back down to pick up some levels down here. 116. It's in the middle at the moment, so we shall see what happens with the euro US dollar. Seems the US dollar is trying to turn around at the moment. So interesting stuff. This is the US dollar Japanese yen once again. A bit here. The Japanese yen is strengthening. No, the US dollar is strengthening. So the US dollar seems to be strengthening a bit. Seems to be picking up. Which is, if you're short on gold, the better aspect of it. There is a level of supply here though as well. So let's just have a look at that. There's a supply level on the Japanese. Oh gosh, does that have to happen? I have to draw that again. It's the only trouble with charts, you want to draw something in and then you end up with a really strange order or something. But now if I look at that supply level on this US dollar Japanese yen, it looks like it's coming up in to take that money, and then it might go down. So it might actually go short from here, because it might actually go up in there, take that money, and then start falling down. That's actually quite interesting as well. Just looking at the US dollar Japanese yen there. This is the NASDAQ, the Tech 100 as you know it. And it's building. Little building blocks here. There's the level that we're looking for. Might get up to that, and then also come crumbling down. In the end, it's the same chart. I like to keep an eye on the higher time. Now I'm trading 15 minutes. The best way to trade the day trade, or the easiest way to trade the day trade, is if you're day trading, don't try and trade everything because it's just too much. Pick 3 things that you want to trade. Now, what I would normally do on day trading in the old days is I would pick, for example, the NASDAQ, maybe the S&P 500 and the DAX, just as an example. Even though the NAS and the S&P is the same, doesn't matter. They're moving around. Maybe I would take the UK 100 or something. Take 3 or 4. And then I would see on each one, on the day, is it bullish or is it bearish? It's bullish on the day. If I go to the 4 hour, it's bullish. If I go to the 1 hour, it's bullish. So on the 5-minute charts, I'm trading bullish. So on that particular product, I am only taking long trades for the day, no matter what. So that's slightly different to the way some other day traders trade. Other day traders trade on, if it breaks below that, I'm going short. If it breaks above that, I'm going long, so on and so on. But what I do is I look at the higher time and I say it's bullish. And then if it's bullish on the day and the 4 hour and the 1 hour, then I'm only trading bullish trades on the 5-minute, even if it's going down. So when it goes down, goes down, goes down, and then it says to me, I'm going to go long now, that's when you buy. That's how you make money on the day trading on the lower time frames when you're trading products on those types of scenarios. If you try trading against the trend on the higher time frames, in all likelihood, most of the time, you'll probably lose on those trades. So just keep that in mind if you're a day trader. Just keep it in the back of your mind. Just look at the higher time frames, see which way the thing's going, and then come down, trade on your 5 minutes, trade that way, and then you might stand a chance of doing okay. But that said, just remember that, if you're trading on the 5-minute and you're trading on that green candle there, within that candle, within that time period, that's 4 hours, you're going to have a number of ups and downs on the 5-minute chart. You're going to have up, down, up, down, up, down. But what you're looking for is it's overall bullish. So even if it goes down, you have some drawdown, it turns around, goes up, you know that it'll probably go in your favor. That's kind of what you're looking at. It's kind of what you're looking for. Not complicated. Just keep it simple. Don't overcomplicate things. Don't try and draw lines everywhere and make it insane. Just do that. It'll be okay. Yep. That's what Sir Lancelot said. Yeah, he's wrong 7 out of 10 times, but makes the small loss and the big win. And that's what it's all about. It's all about the strategy. It's very much, when you talk about risk to reward ratio, you've got to be very careful, because when I tell people you need to make a 2-to-1 risk to reward ratio, then they get upset. Because, and the other problem you've got is if I say to you, buy here and make sure you've got a 2-to-1 risk to reward ratio, then you're just going to put it at 2-to-1, whether it can make it or not. So what you've got to look at is the chart, and just look at if there's a possibility that it can make you more money than you're losing. And if it can make you more money than you're losing, that's all you need. It doesn't have to be exactly 2-to-1 or 3-to-1 or 4-to-1. If it is, it's brilliant. But it just needs to make you more on the wins and lose you less on the losses. That's all it needs to do. And that's where people go wrong, is they just target the 2-to-1 or the 3-to-1 or the 4-to-1, rather than just look at, can I make more on the win than I'm losing on the loss, and then take it from there. Pretty much that's how we always are going to look at it. But as I said to you guys earlier, my main concern at the moment is this window. And I have to say, this is the US dollar, the Dixie. That death cross does worry me. It is green at the moment. How green can it go? Because if that falls, we're going to get a super cycle. And it's going to change a lot of things, but it does look like it wants to hold up. Does look like it wants to stay up, but if it gets all the way down to here, that's quite a big gap. We're going to see quite a big move in the commodities to the upside. I'm just looking at how much that moved on that cycle. This is a weekly chart, and that might move as well. So you might get some movement here, but I think this is swinging around. It does look like it's come down and starting to swing around. I'm hoping it'll swing around and start going back up on the United States dollar. It's really important that it actually does. I would prefer to see that go the other way. This is the DAX is starting to show a big red candle. I don't know who's short on this, but I'm actually waiting for it to get up to this level, take the short from there. I think it'll be a short from up there. And then we've also got the S&P 500, which is also now starting to show signs of weakness. Look at this, guys. It came down, broke through, broke the structure, headed down. It's within a range, but it's broken that structure and headed down. Didn't go down to the bottom, but it did turn around, pincer bottom, going up. But it's a retest. It's retesting that trend support. It's hitting it as a resistance now, and it looks like it wants to break down. And if it breaks down here, in all likelihood, it's going to come all the way down to the 6,300. Quite interesting. So the S&P is looking a bit iffy. The NASDAQ, neither here nor there. So that concerns me with this Japanese Nikkei trade, the JAP 225. I was calling it long, and it does look like it wants to come back and retest as well. Let's just see if it will go long on the Nikkei. Interesting. But what will happen if the Dixie falls? For sure, is this gold will go to the moon. I mean, we'll probably see it go through 4,000 or 5,000. It'll be insane if that happens. Now, the insanity of it is, though, this South African Rand trade, that's the one that will concern me the most. Because on this, it's small, but on my main account, it's not so small. I've got to consider this trade. I might have some reconsideration. That's something that happens to you in the markets, by the way. You confidently marry a trade, you take a trade, you think this is going to work. This can't fail. This is going to work. And then suddenly things start to fall into place that say to you, maybe you should reconsider this and just think about what you're doing, because there's a whole bunch of things falling into place that can turn things pear-shaped and turn things the other way. Very, very, very careful of those types of scenarios. Happens quite often. You'll be surprised. You'll be shocked and stunned at how often that is actually going to happen. So tell me, guys, how many of you actually like to trade the news, the fundamental news on a weekly basis, the Wednesday, the Thursday, the Friday, the farm, non-farm payrolls, the jobs figures, the CPI data, the economy, the Fed talking, and that sort of thing? What do you guys do? Do you actually trade it, or do you walk away? It's interesting to know. Very interesting to know. Danny says if S&P 500 goes down, good opportunity to buy as investment. Absolutely, Coral. Totally agree with you. I'm waiting for the long trade on the US 500. And I was actually discussing it with someone just yesterday on a personal basis and saying to them, don't dive into the S&P 500 just yet. Let's wait for it to come back. Let's wait for a good opportunity and let's get in again. Because there was someone asking me if they should start getting in now. We're discussing the possibilities, and I just feel that there might be a bit of a correction on that as we stand at the moment. And then similarly, I'm just gonna go in here and it'll be the US 30. Let me see if it comes up as down. No, okay, US 30, pretty much Wall Street. Okay. So Wall Street will be very similar to the S&P 500. It's not going to be very different, but if you draw it in here, there's your Dow Jones. Now, you've gone long on the Dow Jones, but you've got to consider that The S&P 500, the DAX, the NASDAQ, all of them might actually be going short. So I'm just looking at it as a picture. There is a triangle developing here, which it could break out of, which is great. There is a trend that it could break out of, which is great. But what we're seeing here is it's kind of in the middle of nowhere. It's kind of, let me just put this in perspective for you. Let me draw a price line across the top here so we get an idea. And let me draw a price line. I think we can draw one across the bottom here, just out of, I'm not going to go into too much detail on it. I'm just going to have a look at it here for you. So now you're in that range. Okay, now let's draw a trend line in on the Dow. So now there's a trend. Okay, now you've got this one going down this way as well. I'm going to draw a lot of lines in here just for the hell of it. Bit of a triangle developing there. Going long on this at the moment wouldn't be my favorite thing to do. There's just no trade here on the Dow Jones for me at the moment. Just doesn't look great to me. Let's just take that a little bit further back. I mean, we could draw this off the day chart as well and just get a picture. But it's got to break out of this triangle one way or the other. And if I look at the Dow Jones, what I will do if I'm looking at the Dow Jones is just go back and look at the S&P, because it's probably going to follow in a similar fashion and it's probably going to go a similar way. There was a big candle up the back here. It's bullish at the moment. It's long. But if I was going to buy into the Dow Jones, I would wait for a better entry. Maybe you took the entry here. I'm not saying you should get out if you're in. I'm not saying you should go short if you're in. But I would be cautious of it based on what's happening on the S&P 500. But yeah, it's okay. It's not too bad. See, if you look at the S&P 500 here, at the moment this has gone down, it's come back, it's retesting, and there's a good chance that this is going to fall. It could go up, but then it could hit that resistance as well and still fall. So yeah, if the S&P comes down, the Dow will probably come down as well. So just keep an eye on it. Just keep your eyes open when it comes to that. I was a youngin'. I used to use the volatility to make quick bucks. I used to use the volatility to make quick bucks. I still, where I can find the opportunity, use the volatility to make quick bucks. You could buy it, leave it, and when it spikes, take the money. But not everybody allows it. Not everybody provides it. And how's it, David? You don't trade news. That's the idea. You see, the trouble with news is, especially the small-time news, is it's just going to spike you one way or the other and pull you left and right. And the funny thing is, you think you've got it right, and then they start coming out with, yes, but if you look deeper into the financials, and then suddenly it all goes the other way. Small news, I stay away from. Trade the big news. Trade the big fundamentals, the things that are really happening in the world. That's what's important. So yeah, and if you can trade the volatility, if you have access to it, trade it. It's actually really great. It's one of those ones that can make you some money. And that fact, any volatility index, you just have to figure out where the levels are. It's going to be quite an interesting week with regards to the. I see a lot of hype around the non-farm payrolls and the news. Let me just go back here. If we go to the news, I see there's a lot of hype around US stock futures muted before payrolls report. Interesting that they're all worried about that. United Airlines expands winter. US private payroll miss expectations. Okay, there you go. So there you're going to have some news movement. Funny that the charts don't move as much as they used to. You see the volatility here? It needs to get down to about that level down there, and you can start buying on that. The private payrolls have missed expectations. That's always interesting. So you see, now you were long on the Dow. Interesting. And now I see there's a little red candle developing there. And on the Dow, you'll probably get a similar red candle. I'm just going to have a look over on this one. It's the same as the other one. Yeah. Because if you go here, here's your Dow Jones. That's still got a green candle on it. But that could all change in an instant. Should be interesting to see. I see there is a start. There's a bit of pressure on it. And it could push to the downside. Yeah. Under the jobs figures, what are they doing to the dollar? Interesting. Boom. Let me just have a look over here. So the dollar, United States dollar, is pushing the Canadian dollar, and the dollar's weakening. Okay. What's happening on this side of the South African rand? Okay. And the dollar is weakening. Okay. The dollar's weakening a little bit. Does worry me that thing is going to drop. Good go. Carl asks a smashing question, and that is, Rob, how long had you been trading when you realized the market's 50-50? How long? So you guys, I don't want to scratch my head, but you guys are really lucky that I'm here telling you that the market's 50-50. Because you know what? No one told me that. No one told me that the market's 50-50. In fact, everyone told me that you need a win rate. Everyone told me that you need to trade on the charts. Everyone told me that the chart's got a predictive capability and it goes up and down like this. And you're going to make money on the highs and buy on the lows and all these stories. And you're going to have an edge in the market. You're going to have an edge. No strategy. No strategy whatsoever. I was one of those idiots that got into trading with, I'm just going to buy shares and I'm going to make money. Okay? Brilliant. I was one of those. And it took me a long time to figure out that the market's 50-50. I think it was more than 10 years, to be fair. It didn't take me a year. It didn't take me 2 years. It didn't take me 5 years. I think it took me longer than 10 years. I can't put an exact date to it. I just can't. It was a long time ago when I started to figure it out. And then I only started to figure it out. You must remember when I figured that out, I actually had to start figuring out a strategy and a business plan and working this all out. So it was thanks to a couple of friends and a couple of older people that kept on pumping into me that time in the market is what makes you the money, not timing the market. Every time I heard that saying, I felt like throwing up. I was getting upset with it. I was like, stop saying that to me. I'm not interested. Stop telling me it's time in the market. I'm trading here. And then I started to figure it out. I started to work this out. I started to read a couple of Warren Buffett things, with his investing and all that. And it just all suddenly started to hit me what was going on here. That there was no way that you could really time the market. There was no way that you could really get the perfect timing on any trade. I thought, well, if there's no real way that you can get the perfect timing on any trade, why am I trading? What on earth am I doing? This is 50-50. There's just, it's ridiculous. I mean, I got more chance of losing than of winning because I'm not as lucky as some people where they can just walk into a place and win something. I'll probably lose it. So I'm thinking, well, hey, how am I going to do this? How am I going to get around this now? Because after all these years of trading, I'm doing okay. I mean, surviving, whatever. But after all these years of trading, I've now realized that it's not the charts that make you money, that they can't predict anything, that you can't time the market. What do I do now? Well, the first thing you do is you start really investing. And that was the first thing I did as well. I started separating my shares from my trading. So the investment account became a thing very quickly. That became like, okay, this is now my investment account. This is a set and forget. Now I'm going to pull the Warren Buffett thing here. Okay. Get clever. Start just investing. But now what do I do with the trading? How do I work around that? Because I can't just live off that now. I'm a trader. Now, how do I do this? You know? So then I started to realize that I have to work a way to make money without the charts. So I started to dig around and I found a few. In those days, YouTube wasn't as prominent as it is now. I don't think it was even around, to be fair. And I started to dig around and I found a lot of information on this sort of concept because it does come from casino concept as well. And of making more on your wins, losing less on your losses. The coin toss, that sort of thing. And I started to figure it out. And then I put it together. It's so simple, actually, but you just don't see it. So yes, it took me, to answer the question in short, a supreme long amount of time to realize that charts don't make you money, that the market's 50-50. Even though everyone had been telling me since the day I started. Interesting, though. Very interesting. You know, I think it's good for people to know, but there's a lot of people that don't want to believe it. I didn't want to believe it when I was told at a young age that, hey, you can't time the market. And I thought, well, there's loads of people out there doing it, aren't there? But they don't tell you that those people aren't really timing the market. They're just investing. You see, if you take institutional money, the way they do it is actually quite interesting. What they do is they don't even have these lines on, and they do use one indicator in most cases, and that is the RSI, Relative Strength Index. So this is how institutional traders will, many of them will look at their trade. They'll look at this and say, at this point, it's above 70, it's way overbought, so I'm going to sell it. I'm going to sell it there. And at this point, it's oversold, so I'm going to buy it there. Really simple stuff. Some of them will draw the trend line in across here just to tell them that, you know, if it crosses that level, I'll buy, and then off they go. Over here, they would have said, it's way overbought, I'm going to sell it, and they'll sell it. And you can clearly follow the pattern. That's how institutional traders will trade it. The reason it works more for the institutional traders than the retail trader is because as a retail trader, you want to ride the wave. And very often, something can be overbought for an extended period of time. So you can be wrong quite often, or the market can be wrong for much longer than your pockets can hold out. So For an institutional trader, it's easy. They've got deep pockets, so they can just like, oh, it's way overbought, so I'm just going to sell it here at this point. The minute that RSI starts to turn around. And they can basically just work off that chart the whole time. So they're not looking at price, they're looking at RSI. They're looking at maybe just relative strength, and that's all they look at. They don't even look at price action, nothing. And that's actually what makes quite a big difference in the markets when they're trading. So for example, now you've gone along on the Japanese, what is this? This is the Nikkei, right? And you can have a look at it and say, why would we go long on the Nikkei? Well, if you look at that and you want to take it and you want to put it in there, you can. And if you draw that on the RSI, there's the long trade. It's long, it's going, and it could go all the way. And that could give you a decent trade on the RSI. The RSI is actually a cool way to trade, but it works better for the institutional traders. And you have to be patient. You've got to wait for these things to cross out as well. Let me take that away so I don't confuse you. But that just goes to show you how can I put this, how basic the market is. How basic the market is. There's no guarantees in the market. The market is 50-50. And for an institutions to just look at an RSI and say, I'll just buy it when it's overbought and I'll sell it when, or you know, I mean, I'll just sell it when it's overbought and buy it when it's oversold. That's how it's done. There's nothing to it. Buy low, sell high. That's how they work. How many times I got told that when I was younger? Buy low, sell high. Buy low, sell high. And it's a supermarket mentality which doesn't really, you know, apply. But if you apply it to an RSI or you apply it to a simple system, it actually works. It works when you've got deep pockets. Yes, Blue Mango, I do use standard settings on the RSI. I don't change the settings. I'll change the settings on the stochastic. I can't remember if it's 1433 or something like that. But on the RSI, I keep it standard. I don't change it. I don't do anything with it. And like I say, I only use it sort of for if I look at something and I'm just not sure of it. For example, let's go to the Dow. Is this the Dow? Yeah, the Dow. And, you know, this one, not 100% on it. So you put the relative strength index in. And why isn't it adding it? Come on. There you go. Okay. Put the relative strength index in. Now you've got a relative strength index in on the Dow. And what's it showing us? It's actually showing us that it's going flat. It's okay to buy. You can put the trend line in here as well. So if you were long on it, you're not in a bad position, but it doesn't look like it's going anywhere either. It doesn't look like it was completely oversold when it went up. It doesn't look like it's completely overbought when it went down. You would have sold it at that level. You would have sold it at that level. You would have bought it at that level. Those are the levels you're looking for effectively. They're just completely out of interest. I just keep these the same at the end of the day. Let's just close that. Just for information. So now you know, kind of like, oh, I'm long on that trade. It's okay. You know, not too bad. I'm all right there. For example, if I wanted to check Brent crude oil, I'm really in trouble with Brent crude oil, aren't I? It looks like it's going bad. But yeah, there you go. RSI, relative strength index, standard relative strength. It's coming all the way down. But it's getting oversold, so yeah, probably go back up again. There was the sell point. There was the sell point. I should have been awake to that, but I don't use the relative strength index. Probably should actually, but I don't. I used to use it all the time. Used to have it on my charts all the time. Relative strength index. But then I used to have relative strength index, stochastic, MACD, volume. I mean, there was no place for the chart. And then I'd have simple moving averages. I used to use the 8 or 9 and the 20 and the 50 and the 200. Have them all on there, you know. Yeah, that was many years ago. But you don't need all that stuff. You really don't. It's not going to help your trading that much. But the RSI might help you. If you want to use any indicator on your charts, at the bottom of your charts, use the RSI. The RSI, but don't let it confuse you there. Because that's one of the problems with putting those indicators at the bottom of your charts. What they tend to do is they tend to confuse you. You see a trade, you want to take it, you look down at the RSI, and you think, oh, don't want to take that because the RSI says don't take it. So don't let it confuse you. You know, if I was looking at Brent crude oil now, it might confuse me if I look at the RSI because the RSI is getting to oversold, but it might still be going down, and it doesn't mean it's not going to go down. Like I said, the market can stay much longer than your pockets can. And that's where always where the big problem comes in. Rob, I use a RSI length of 4 on the daily and the 4-hour charts to help me with support and resistance levels. I don't use it to trade, but I see some people swear by RSI divergence. Your thoughts on divergence? My thoughts on divergence are this. It's useless. I've tested it. I've tested it at length. And don't get me wrong, divergence can work. If there's divergence, you might get a trade. All right. The problem with divergence is its frequency. How many trades do you get with divergence? Now think about this, because you've been trading with divergence. If you see a divergence and you're looking at a trade, if you see it, then yeah, okay, pay heed, look at it and say, there's a divergence, you know, work with it and look at the rest of your trade. But don't sit looking for divergences to trade with, because you're seldom going to find them, and the frequency is just not there, so there's no trades. You're going to pull your hair out looking for trades if you only trade with divergence. So the way I look at divergence is, if there's some divergence, then I'll look at the trade. So for example, I put this up and I put the RSI on and I go, is there any divergence here? Look at this. No, there isn't. That's perfect. That's perfect. That's perfect. There's no divergence here whatsoever. Where's the divergence? How far back? There is no divergence on this RSI. So I'm never going to get a trade here. Yet we've taken trade after trade after trade after trade on Brent crude oil. Best way to trade with the RSI is, like I said, there it's overbought, so you want to sell it. When should I sell it? Quite easy. Just take a trend line and just draw it up there. When it breaks the trend line, sell it. Okay. Same goes for if you want to buy it. When should I buy it? Buy it when it breaks the trend line. Simple as that. Like over here. Boom, there we go. You would have drawn a trend line in there on the RSI. It's turned around, it's broken to the upside. Buy it, and then you would have bought it here. Wouldn't have been perfect, but it worked out in the end, and it would have bought. There you go. Best way to trade the RSI. Divergence, you're going to wait for the rest of your life for something to happen. If I see a divergence here, marvelous. Marvelous, then I'll use it. But how often do you see a divergence on any particular trade, particularly on 4 hours and day charts and things like that? So my thoughts on it is, don't waste your time. I don't waste my time on it. I will see it. I'll spot it if it's there. If I see it, I'll be like, oh, look at that. There's a divergence. It is an important warning, let's say. You know, if you see it, you can be like, oh, okay, there's a divergence there. Let me work with it. But further than that, no. And you can use it the same way as if, there's another way to trade as well. If you get, for example, you get products that run in confluence with each other. Now, I can't think of one right off the bat. But let's say Great British Pound US dollar, Euro US dollar. You get the Great British Pound US dollar and the Euro US dollar. And you put both of them on a chart. Okay, you put them both on the same chart and you add them together. Not sure if I can even do that here. Probably not on this one. On MT5 I can do it. Effectively, I've never done it on this particular platform, so not 100% sure here. I can put two charts on the same chart. But yeah, okay, but on MT5 you do it. You can take two charts, put it on the same chart, and then you get this Euro US dollar. They run together, but then they separate at a point. They pull apart. And when they pull apart, then you can take a short on the one, a long on the other one, and bring them back together again and make a profit out of the gapping between the two that normally run in confluence with each other. That's another way of working a divergence in your favor. And you know what? It's a win-win trade. You can't lose because it will always come back together, always. So that's another way to trade if you want to. I've done that many a time in the past. Many a time. Yeah. So that works as well. Wonder if you can. Compare or add symbol, you can do it here. Okay, so yeah. So for example, I'm going to take this US dollar CAD out. I'm going to put in the Euro US dollar. Okay, Euro US dollar. And then I'm going to compare the Great British Pound US dollar. Okay, there you go. So there you have it. All right. So now you've got your two prices on the same chart. And then you see how it follows perfectly? Okay, here it broke through, right? But it's following perfectly. And if you suddenly see that these two pull apart, like that one goes up there and that one goes down there, then you'll want to go long on the one, go short on the other one until they come back into this pattern again and follow through. And that's what you'll be looking for. That'll be quite that actually works quite well. So that's just for interest's sake, for those of you who want to know how to do that. that actually is something that I've done many a time in the past. Okay. RSI is commonly used as a confirmation indicator in algo trend trading. I'll stick to my EMA and VWAP then. But VWAP only works on the lower time frames, right? It doesn't work on 4-hour and day time frames. Exponential moving average. If you're using moving averages, just remember they are lagging indicators. They do lag. But there is nothing wrong with using an RSI for confirmation on anything. It is a good confirmation, but don't bother with divergence. There you're wasting time there as well. You can use VWAP on the lower time frames. It does give you a lot of information. But on the higher time frames, it tends to mess you around. Moving averages, whatever system works for you, it's great. You know, if I didn't know anything about price action, if I didn't know anything about support and resistance, and I didn't know anything about any of that, I would trade with the RSI. I would trade when it's overbought, oversold. That's it. That's what I would do. And that would be the easiest way. The reason I use the price action is because it just gives me a line in the sand. It gives me the ability to manage my risk, where to put my risk, where to put my profit, which way the market's going, the trend, counter trend, the range, you know, it just gives me that information that I like to trade with. You know, whereas if you were trading on the RSI, you would simply be trading on it's cheap and it's expensive, and that would be at buy low, sell high. That's all you would be doing. So there's a bit of a difference, you know, but it is useful and it does help if you want to know where you stand. It gives you confirmation, as Nick says, it gives you confirmation in the markets in many respects. It helps you. But yeah, it's much of a muchness. You can basically choose whichever way you want to trade. Are you trading a moving average crossover? Or are you trading when the price crosses through a moving average? It doesn't really matter at the end of the day. As long as you've drawn some kind of line in the sand so that you can manage your risk and manage your strategy. That's all you need. I mean, for example, if I was trading this now and I just wanted to use a moving average, one moving average, maybe I would use a simple moving average. Maybe it would be the 20-day. So what have I done here without a moving average? I've drawn a line in the sand. I've drawn a line in the sand. I know where I am. I know it's coming off support, heading for resistance, breaking through the trend, going to the upside. So I've got all that information to trade with. What if I was trading with a moving average? What if I was trading with a simple moving average? Okay, let's just try this moving. There, just a simple moving average, okay? And of course, it just puts its own moving average on, doesn't it? It doesn't really ask me what flipping time frame I want. Just, yeah. So this is a 9-day moving average. Let's say I wanted to put a 20-day moving average on. So 20-day simple moving average, 20-day simple moving average. I could simply say, well, when it goes above that line, I'll buy. And when it goes below that line, I'll sell. When it goes above that line, I'll buy. When it goes below that line, I'll sell. And you could work with it like that. Or you could have another moving average which crosses over that one up and down, giving you a buy and a sell at every time the lines cross each other. It's totally up to you. But yeah, that's if you're using moving averages. It's just drawing a line in the sand the same way that we are here, drawing a line in the sand. That's all you're doing, drawing a line in the sand so that you can decide when to buy, when to sell, where to put your stop loss, where to put your risk, and those types of things. Easy, really. And like we said, the RSI is great. But don't think of the RSI as just something for divergence. It's not. The RSI is nothing to do with it's useful, but it's not about divergence. The RSI is about it's overbought, it's oversold, and you're just looking for it if it's breaking the trend or it's counter trending or anything to that effect. Don't think of the RSI as a divergence product. So let's put it in here. RSI, Relative Strength Index, where we go again. Don't think of this as, oh, it's divergence, because there is no divergence on this. It's following the chart 100%. It's actually doing a great job. What you can get here from this gold, for example, now if I was in a big money guy, you know, an institution, I would be selling here. I'd be saying, well, it's time to sell. And why would I sell here? Why would I sell gold at this very point? Because it's so bullish and it's going up and it's in the trend and it's going well. And on price action, I wouldn't sell it here. I won't sell it. But on the RSI, I will sell it. And on the RSI, I would sell it for the simple reason that look at that. Okay. Not only is it way overbought, but it's also broken back through that trend support, and it's now heading to the downside. So there's a very, very good chance that is going to come back down again, come back down to retest, and then you'll get another buy on it. No divergence, just a simple RSI telling you that it's way overbought, but look how long it's been overbought for. It's been overbought since that candle all the way to there, and that's quite a distance. So it's been overbought for quite a long time. So as a retail trader, You can't just jump in because it's overbought. This is what an institutional trader would do because they've got deep pockets. They can wait. Maybe you can't. That would be your stop loss. So for what we do as retail traders is we draw a trend line in. If you're using the RSI, you wait for it to break through that. Once it breaks through that, then you know there's a high probability that it might go the other way. It's turned, it's gone back into the level, and maybe you could get a short trade off of it doing it that way. Just so that you can have some extra information for those guys who want to trade it that way. So as I say, don't just use it for, oh, it's overbought, I'm going to sell now. Be careful of that because, as I say, you saw how long that was overbought for, and it carried on going up. You have to wait for it to counter, and then you can get in. Exactly what Nick says. The more indicators you have, the more you'll be frozen from taking a trade. And I'm probably doing the wrong thing showing you how to trade even with the RSI and with a number of other things, the moving average and all that, because a lot of you will go out there and go and try it now. And I get that. There's nothing wrong with that. But do yourself a favor. Don't put them all on one chart. Don't try and trade them all together, because exactly what Nick said here right now is true. And that is, the more indicators you have on your chart, the more you're going to freeze. Because the whole point of charting being 50-50 is this. One trader believes it's going to go long, and the other trader believes it's going to go short. So thus, you create the buy and the sell. You've created the market. But if you're one trader who's got lots and lots of indicators on your same chart, then you also get the scenario where you start trading against yourself because you saw on your original system that it was a buy. And then you put all these extra indicators on, and then exactly what that other trader saw was a sell you see on your own chart. You start to think, well, is this a buy or a sell? And it freezes you because now you don't know. You're never going to take a trade because you don't know if it's a buy or a sell. Now, the whole point of the strategy, the entire point of the strategy is to try and understand that you can take any trade. You just have to manage it, and you have to try and make more on the profitable ones and lose less on the losing ones. Understand that you're going to lose trades, probably more than what you win, depending how lucky you are, of course. Now, the problem with it is too many people get in and think the charts are going to make the win for them. How is it possible that a chart is going to make you win if two traders get a different point of view on the same chart? So in other words, you're reading it from a different perspective based on the fact that you have a different system. All the systems work. It's just a question of how you manage it. So all the system actually does is it gives you the opportunity to draw a line in the sand. It gives you an opportunity to say, I want to take this long, and I want to put my stop loss there because I think that if it gets there, then it's going the other way. And I want to make a long profit all the way up to there. It gives you the opportunity to do that. And another trader will come in with a completely different perspective and say this is going short. That's why you don't want to put too many indicators in your chart. And you also have to understand that charts cannot predict anything. In fact, it's going to go either way. But if you can manage it, you can make some money with it. Interesting points. Interesting points. But I've seen many a person get frozen out. I myself made those mistakes. I mean, I do have a few monitors. I accept that. But there was a time when I had loads of monitors, right? What's the point of that? I'm sitting there looking at different monitors. I don't even know what to look at. So now you've got different products on different monitors. And so you don't even know which one to choose because it's so confusing. So that you have to do away with and reduce it down. You know, you can literally trade off a mobile phone or a laptop. You don't need all these monitors, but it's great to have them. And then the other thing is, now you've got all these monitors, but now you put all these lines and all these indicators onto a chart, and you can't even see the chart. That's insanity. And now you're trying to decide which way to go. Just think about that. It's absolutely crazy. So yeah, no, I keep it as basic as possible. So from my side, I will use maybe the RSI, like I say, but I'll only use price action where I can. Somebody asked me the other day, would you use volume? Yeah, sure. But you know how seldom I use volume? Volume, what does volume tell you? Volume tells you whether the move is valid. That's all it tells you. So what's the point of me having volume there all the time, staring me in the face? There's just no point. How often have I looked at a trade and the volume said to me, do you know what, Rob? That trade's not valid. I don't think that happens on a regular basis. Very, very few times. So there's no point in having the volume profile there. It's a waste of time. 9 times out of 10, when I look at the volume and I look at the trade, it's valid. 9 times out of 10. There's no point in that. So many different indicators out there are just a waste of time. Somebody invents it and everybody gets involved in it. And it's that never-ending cycle of doom. You go through these indicators after indicators and systems after system after system. And eventually you come back to where you started. Basics, empty chart. Get on with it, you know. The sooner you understand that the charts don't make you money, then the sooner you'll figure out that there is really, 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 really no point to playing into the charts and the systems. Rather just work on the, how can I put it, the future of your trading. The strategy. Work on how you're going to make a profit. That's the only way to do it. Like I said, if the Dixie does fall, the US dollar, if it does collapse, then we're going to have a commodity super cycle most likely, and it's going to go insane. It's going to go crazy. It's going to be an interesting thing. Yeah, Wyckoff will be rolling over in his grave because of my volume comments. But that said, Wyckoff is pretty complicated, and what I've done with Wyckoff is really simplified it. Let's be fair. I do understand that volume has its place, but you know, you've got to look at things for what they are, and you've got to keep life simple. Why do we have to overcomplicate everything we do? You know, if I sit here with the volume profile on my system all the time, and I keep on looking at it, like I said to you, how often does that actually play out? How often does that actually say to me, oh no, we've got huge amounts of volume and no movement, which means that's a really good buy, or we've got no volume and this huge movement, so it's a fake move or whatever. How often am I looking at that? How often is that going to happen? If I feel something's a bit fishy, I can put the volume on, have a quick look, and take it off again. No problem. But I agree, Wyckoff would probably get upset because, you know, it's a system again. It's another system that's played in, and they believe that you have to have it there too. But Wyckoff's also got a lot of other moving parts to it, which are very similar to price action and very similar to what we do. So bear that in mind. It's not just volume. There's a hell of a lot of moving parts to Wyckoff, and it's a very complicated thing again. It gets so overcomplicated. It's about, recently there was ICT. Remember, everybody was coming in with ICT. And the guys were overcomplicating it insanely with all these different things and all this different stuff that you've got to do and move to the left and move to the right. And it's a system. It's a line in the sand. It's something that works. It's another charting system, but it's so overcomplicated. And what I'm trying to get across to everyone over time is that you don't need a system. You actually don't. You need a strategy. The system is just there for you to take a trade. to give you that opportunity to take a trade. And every single system works. So don't overcomplicate it. Don't make it complicated. Just draw a line. Like I showed you just now, you could take a simple moving average and you could put it over this chart and say, when it's above the 20-day moving average, I'm going to buy. When it's below the 20-day moving average, I'm going to sell. And you'll say to me, Rob, are you nuts? Are you going to trade like that? Well, actually, I did. I did trade like that. Many years ago when I didn't have computers, that's how I traded. I simply drew a line through the chart and I said, when it's above that line, I'm going to buy. And when it's below that line, I'm going to sell. That's as simple as it got. That was my line. So, and then it was just a question of making money. Back then, I didn't understand that there had to be a strategy behind it. But when you think about it and you come back to it and you think, how did I make money? Well, that's how you made money. Because you didn't realize that you were keeping it simple. You didn't realize that you were just buying it when it was on the top and selling it when it was at the bottom. You just didn't realize it. But you did it, and it worked. That's the whole problem with society, is we believe that something has to have a mathematical equation to it. We believe that something has to have some fancy fandangled system that goes into the play of it, into the working, the background of it or whatever. But you're not trading against candles and lions. You're trading with human beings. Human beings and real money. There's real money moving this market up and down. People are buying and selling stuff. And it's not about a line or a chart or a candle. It's about what's behind that. And what you're reading is a book. When you read the charts, you're reading a book. It's telling you what the people are doing behind the chart. It's not just moving up and down. So it really doesn't matter whether you have lines on the chart or not. What matters is that you can manage the risk, manage the profit. Time in the market, as I say, time in the market. So very much the same thing, like when you start to understand time in the market and you start to think, well, if I have to apply that to my trading, as I said to you, this is where it came to me, was in the old days, was if you can only make money with time in the market because you can't call the market. Nobody can call which way it's going to go next. Nobody can predict which way it's going to go next. There's no system that can predict which way it's going to go next. You can't time the market. Then how am I going to trade? How am I going to trade short term? How am I going to make money short term? And the only way to do that is by strategizing it. Markets are 50-50. Yeah. No, it's all good. I totally agree, Rumango. At the end of the day, people have their systems and they stand by them. Yeah, but Wyckoff is there's a lot of moving parts to Wyckoff, I've got to say. But a lot of our system is based off of it. If it wasn't for Wyckoff, we probably wouldn't have what we have with price action and that sort of thing. ICT probably wouldn't have existed without the original Wyckoff. So Wyckoff has put a lot of good information in place, but it was just overcomplicated. It was just too complicated, too much stuff going on. I mean, if you look at the new fad, the ORB, the opening range breakout, I've seen it all over the YouTube. And if you look at the new fad and you think, well, that doesn't work, and I agree, it doesn't work. I look at it and I think, how's that ever going to work? It doesn't make sense. But there's a lot of people that are swearing by it. But the only reason for that is because the market's 50-50. It's effectively just another system with a line in the sand. If it breaks above that 30-minute candle, or 15-minute candle, then it's up. And if it breaks below that 15-minute opening candle, then it's down. That's as simple as that system gets. Does it work? Well, from what I've seen, no, but it can. But it's basically you're going to win 50-50 like anything else. It's definitely not going to give you any phenomenal win rate or anything like that, and win rates don't make you money. So should it be something that you now throw by the wayside because it really doesn't look like it'll work. No, you can use it. You can use it, and you can decide for yourself what's going to happen. But you see, that's what I'm saying, Nick, is RB is like any other system. It's just like any other system. They all have the opportunity to work if you manage it. So it gives you the opportunity to draw a line in the sand. That's all it does. It gives you an opportunity to draw a line in the sand. I mean, how does ORB work, right? Let's say that was your opening candle and it was on a 30-minute chart. So effectively, if you are, is there a way for me to, is there a pen here? There's a brush, there's a drawing, okay. So if you, that doesn't work either, does it? Insane. Just looking for something to draw with here. Brush, text, icon, blah, rubbish. Absolute rubbish, all of it. Highlighter. Let me try with a brush. Will it let me draw with a brush? Yeah. Okay, let's delete that. That looks terrible. Oh, amazing. And now I've got it like really going mad. Now I'm going to play with this. But effectively, if you were looking at that as your opening candle, if that candle went up there and came back down, you certainly wouldn't buy it because it's just going the other way. So that actually would have worked to the downside. But if that candle had closed with a green candle above that high there, then it would have been a long trade. And if you got a red candle below that, effectively that would have been a short trade. And that's how they work with the ORB. But all you're doing is drawing a line here and drawing a line there. And if it goes above that line, you buy. And if it goes below that line, you sell. Quite easy, quite simple. No problems. I tell you what, every system that ever existed actually works. Quite crazy, really. It amazes me how people like Wyckoff and Livermore figured out all the stuff out without charts, only daily prices, etc. Those people were gods. Well, it's actually how they figured it out, because I was there. I was there at that time before computers, all right? And we used to do things on paper. We also got information from the old men and from the other people. So I don't know how the people in the very beginning figured it out. But, we also read books and we got information from other people. And I actually did a kind of a course when I started out. It was on paper, it was on a file and everything, how to draw the lines and what have you. But what we always did was it was very simple back then. It wasn't so complicated. And, you would always be looking for a way to make it a little bit better. And I think that's what those guys were doing, is just basically adding to the systems. But very much you get these aha moments as you go along as a trader, and you figure out what comes next. And that's how it works. The fact that we've got computers now just makes it slightly different and slightly easier. But yeah, I have to say that someone like Wyckoff, who designed that very, very complicated system, I don't know when he designed it, but yeah, he did good. He did good. Yes, I know, Nick. The candle has to close above the line or below the line. That's pretty much it. That's pretty much the basis of the ORB strategy. The candle has to close above the line or below the line. If it doesn't, then it's going the other way and what have you. And it's just like any other system. It's a line in the sand. If it's breaking out to the upside, you're going to buy. If it's breaking down to the downside, you're going to sell. Go for it. Go for it. But if you're going to do it on the 15-minute, if you're going to do that, because it's generally on a 15-minute candle, or a 30-minute, then just look at the higher time frame, see which way the day is going. Just have a look if the day is bullish or bearish. and then just go with that trend, you know, if you're trading on those time frames, and then try and stay with it in that sense of the word. All right, guys, that's been fun. I'm going to be on my way. I'm going to be done today. I hope you guys had a good session, and it was viable for you, and you got something out of it, and it gave you some good info. I see it's Thursday already. Can you believe the week is almost over? That's insane. But the year is going by so fast as well. I can hardly believe it, man. Really going by fast. But good. Guys, I want to thank you for being here. I hope you enjoyed yourself. Don't forget to join me for the live show next Tuesday. That's at 1100 GMT plus 2. Looks like the Tuesday shows do get a few more viewers, but maybe because the timing works out better, or we have more people in Europe or something like that. I don't know. But yeah, I'll spot you guys soon. And thanks for being here. And as I always say, keep your feet on the ground, reach for the sky, and come back and watch tomorrow's video, which will be excellent as well, which is not live, but it will be an educational video. Guys,